Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. XLK, Apple, and Facebook, daily, weekly. So XLK, we did see a lower low today, but only by a penny, so not significant in any way. And the bulls did buy that dip. And it's a victory for the bulls for not following through with that weak day yesterday and the bear momentum and the close at the low of the day. So we have a new resistance at 61.08. If we do break 60.73, the low of today, the next key support is the low of Thursday, and that's down at 60.29. And that's pretty much the same story on so many stocks that I'm covering, where they held the low of yesterday, most of the case. And if it breaks, we're looking at the low of Thursday, which was the clear weak day from last week, where a new higher low on the daily was established. So no difference here on XLK. That's where we stand. The weekly time frame is a bearish reversal candlestick after a month in a row of upside. If we look back historically, we don't often see more than a month in a row before some consolidation. We did have 6 green weeks here in a row, but other than that, we see a month and then a consolidation candlestick and then a month and consolidation. So watching for this consolidation candlestick to see if it's anything more than normal and healthy, which at this point it certainly is not. Apple on the daily, inside bar, resistance is 157.42 and support is 156.20. Still holding this middle Bollinger Band, and we have a little double top at 157.75 and 157.69. So the range I'm watching is, aside from the inside bar, I'm watching the daily middle Bollinger Band to close below it is bearish, and I'm watching the high of this little 4-day move, 157.75, a break of that level is bullish. So that's where we stand on the short term for Apple. Longer term on the weekly, still watching the potential of a bearish reversal head and shoulders pattern. We would have to see a break of 149.16 for that to follow through. That's going to take a lot of downside from here, so there's no immediate risk of a trend change on the weekly, but it's still something to be keeping an eye on. And if we were to lose that daily middle Bollinger Band, that would be another point in favor of the bears. Facebook on the daily, bulls buying the dip, but not in a significant way. We back tested and rejected from exponential resistance, and we closed near the low of the day. So it is an inside bar, but at this point, this candlestick tells me that it was just an hourly oversold bounce that ended up playing out, with the bears still in control. Support is 171.50, 171.25, and then the 50-day moving average is going to be in the 170.80s come tomorrow. So with the Facebook bears in control of the short term, if we see further downside and we see these hourly RSI levels get oversold again, we can be looking to buy these dips, because there are going to be dips where, heading into earnings season, we have investors and traders looking for their discounts with a bullish market overall. So hourly oversold levels are time to start looking to buy the dips on these names. And we'll be looking at Facebook. Again, Facebook's hourly oversold bounce that started this morning, really in extended hours, followed through and had some nice gains, but it was very short-lived. So we'll watch for another opportunity if we do see downside and a break of supports tomorrow. So that's where we stand. Tech sector is still holding on, but watching that low of today, a break of the low of today, and the momentum shifts back to the bears after a short-term bounce. It cooled off hourly RSI levels. Thanks again. We'll see you tomorrow.